Welcome back. Now, the Finance Ministry had recently set up a committee under former SEBI-chairman M Damodaran to look at ways to scale up PE and VC investments in India. Now, this also comes at a time when we are seeing large-scale layoffs across startups in the country. Now, speaking to CNBC-TV18 exclusively at the launch of industry body FICCI's Model Risk Code, former SEBI chairperson M Damodaran spoke about ways to scale up PE and VC investments into India, lessons from layoffs in startups and regulatory changes needed for ease of doing business.
You've released a model risk code today. How relevant is it for the PE VC ecosystem, also for startups at this point?
I think the model risk code is relevant for everyone who's doing business, because it is size neutral. Risk is a size neutral problem. Everyone has risks. And if you recognize that early enough and put in place steps to address it, the company will be better off, the individuals will be better off. So it's relevant for everyone, whether it's a startup or a 100-year-old company, equally relevant.
Right. Just to also ask you about the need for greater parity, greater rationality when it comes to taxation on domestic capital. This has been a demand of many PE VC investors from startups as well. How do you see this?
Well, we have received as a committee representations from 4 sets of people. They made presentations to us. This has been one of their asks. As to what my thoughts are, I will hold them back for another month or so till we have the report out, because we are in this discussion stage. We've got inputs from a large number of people. The committee itself has considerable expertise drawn from various sources. And we're looking at all of this. Our objective is to see how to make life a little easier for people that are actually investing in India. Therefore, I don't want to get into the specifics, but this is certainly one of the asks that the committee has received and is addressing.
By when do you think you'll be able to be ready with your report?
Our target date is the 9th of December. We are hoping we will make it by that time. We have had several rounds of discussions among the committee members, and now we are just putting it all together in terms of what we can recommend, what we cannot recommend, because everyone has given us long lists of demands, saying that India would be a much better investment destination if all of this was done. At the same time, there are some regulations that are in place for a certain reason, and it's not without reason that regulations or laws got written. So we have to see whether that rationale still holds. Even if that holds, is there a slightly lighter touch way to do it rather than keep it in its existing form? So these are the possibilities that we're addressing.
Right. Looking at ease of doing business, this has been a big priority for this government. If we were to ask you about 2 measures that the government can take to make it easier for companies to invest in the startup ecosystem, make the investment climate more friendly, make India a more receptive place for investments, what could that be?
No, I think certainly you got to look at all the existing regulations and laws and see whether there are any among them that are past their sell-by date, have lost relevance, because you write laws and regulations in a context. Has the context changed? And of course, at the back of all of this, we got to keep in mind the fact that India needs to see a lot of investment coming from outside of India. So how are you going to make it a little easier? That's exactly what we are addressing.
Right. What do you think the budget can do to give a further impetus to startups in the country, make sure we get more private equity, venture capital investments?
I think if there are any decisions that are going to be taken, whether based on our report or otherwise, that can signal to the potential investors that this is an easier place to invest, then you will see more investment coming in. But what are the 1 or 2 things? Well, I think the committee will come out with some in the report.
Right. We were talking about the model risk code a short while back, and we've seen large-scale layoffs in startups over the last 6 to 8 months, and those continue. What is the lesson from all of this?
I think companies need to do scenario analysis, scenario planning. In good times, you obviously think these will continue forever. there will be challenges that come in from outside. Challenges from outside your company. When I say outside, within the ecosystem, but outside your company. And you got to see how do you address those. Now, if you don't have a plan for a bad day and you think the sun will shine throughout, clearly your business model has some weakness in it. You need to have fallback options, look at whether you can sustain the kind of workforce that you have. It's a complex issue, but one that needs to be addressed upfront rather than when a problem is staring you in the face.
Right. So SEBI has set up a panel on reviewing mutual fund benchmarks. How do you think we should be approaching this?
Well, I think SEBI did it for the right reasons, because you need to see what are mutual funds. At the end of the day, they are vehicles for retail investors, especially for first-time investors who cannot understand or who have no ability to diversify risk and also don't understand the research that goes into this. So mutual funds play a very important role as far as investors are concerned, big and small. The big person might not have the time, the small person might not have the knowledge for it. Now, given that situation, SEBI will have to do whatever it takes to make this a safe place. And in pursuit of safety for investors, SEBI is looking at benchmarks for the mutual fund industry.
Right. And my final question, sir, thank you very much for giving us this time. You led IDBI many years ago. Yes. Any challenges that you see in divestment there?
It depends what you're expecting from the divestment. Divestment by itself will go through. Will you get the price that you want? Will the processes be right? Do you need regulatory dispensation? All of these are issues which I think the government is looking at and engaging with the regulators.
Well, with that, it's a wrap on this edition of the Newscentre. Thanks so much for watching. Stay tuned to CNBC TV18. The news and updates continue right here on the other side.